Welcome to today's video technical update presented by CMS Forex. It is Monday, December 21st, 2009. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. We start this week that will lead to the holidays by the end, so there will be a decline in trading activity. Nonetheless, the market is still trading, and it's just that we may want to treat the next 2 weeks as one trading week with a low in the middle. So the greenback strength has stalled, and there might be some correction coming up. Let's take a look at the euro dollar, dollar Japanese yen, dollar Canadian dollar, and the euro pound pairs. This video is being prepared at about 4 p.m. Eastern Time, near the end of the US session. The euro dollar pair is still in a very sharp downswing since 1.51, and we've been waiting for a correction for a few days, all throughout last week actually, as it was testing 1.45. A correction was due, but the market broke through, and at the moment we had a pause, but today's action shows a continued bearish momentum. If this market continues, and looking at the euro dollar 4-hour chart, if the market continues and breaks this short-term support here, then it is likely that the market will continue at least to 1.41. Now this is 38.2%. Maybe there will be a pause, maybe there will be a correction, but looking at the speed of the decline, we would need more than the usual confirmation to tell us there is a reversal back up. And even if there is a reversal back up, we would be looking at the 1.45 anticipating resistance here. So still very bearish, and we're just stalking this decline for a correction, and that might be from 1.41, and if not, it may reach our intermediate target at 1.38, and there would be a heightened chance of correction here if it didn't happen at 1.41. Alright, and here being 1.38. The next pair, US dollar Japanese yen. We had this projection since the market came here and showed some signs of reversal. So this is a swing projection to 93, and so far the market has been in line with this projection. So we are approaching 93, and that's where we would expect some resistance. Okay, looking at the 4-hour time frame, we see that we basically broke this moving average, 50 period moving average, and it's been testing it as support. So we may have, when we reach 93 and comes down, if there is a pause there, we may expect either this trend line or the moving average to be tested, and that may be where we would expect some short-term bullish action as well. So the projection is 93, 61.8% retracement area. From there, there might be a decline, and if there is a decline, we're going to watch for this trend line. And also, even in this daily chart, the 50-day moving average has been tested many times, but hasn't been able to establish itself as support. And if it does establish itself as support, then we have a major signal, a major bullish signal. Okay, so you see that we are still at the support area of 2009. So there may be some bullish action coming from this basing action. The US dollar Canadian dollar pair was held here at this resistance. Last week we mentioned that if this broke, we might see a test of our 1.1, 1.11, basically this intermediate high. But the market held here and has declined, tested our rising support. We see that clearer in the 4-hour time frame. Tested the support, but let's backtrack. We had this bullish bearish butterfly here, 127% previous resistance. So this was a pretty significant area for bearish bias, and the market followed through with a decline, and now and it's testing this uptrending support line, and apparently it held. So the market is looking to retest our resistance here. Now looking at the daily again, we see that if the market breaks below, we have some short-term support at 1.04, and if that breaks, we have a little intermediate term support here at 1.02. If it breaks above, then we see some resistance here at 1.01, 1.11. So until these areas are broken, the market is still pretty much ranging, and we would expect these areas to hold. If it breaks above this, then we have major reversal signal. As you see, we had a decline coming down, and that, oh, let me draw it again. Coming down from the bottom here, we're pretty much at the 78.6% retracement, and the market is struggling to hold that. We had a little clear out here, which could be an indication of strength actually. So from here, we're looking for some reversal signals of otherwise there would be just ranging action here. And finally, breaking away from the dollar crosses, we have the euro pound pair. Just to review, we had this Elliott wave count, possible count 1, 2, 3, 4, and this may be the fifth wave here, and within this fifth wave we may have a 1, 2 subwave. Now this subwave, it would have been preferably stopped here at the 78.6% area, but right now the market came back down basically, well, and almost hit the 100% retracement area. So this is more of a ranging action. It's not showing retracement and then continuation. So the market looks like, it has a reversal combination here, and also the stochastic has crossed over, so there might be some bullish action in the next few days that would test this area. The 0.90 area is important, which is also this resistance here. You can see this more clearly in the 4-hour time frame. We see that the market is basically right now in a small range, and if it breaks up, we'll test this. We'll probably test this 0.90 area, and that's going to give us some more clues. Now if this area holds, tops off, and the market continues to drop, looking at this chart, it's going to be more likely that the market will continue to come down and test this previous low here around 0.85. But at the moment we can't say that for sure, and we're basically seeing some short-term reversal signals that will stalk. We'll stalk this rally. If it doesn't stop at 0.90, it may test the 0.9150 area, which is this high here. But if this high breaks, will we have a possible test of our previous high here at 0.94. You see, basically instead of a retracement, we're showing that this is more of a ranging action. So if it was stopped here at 0.98%, I'm sorry, 78.6%, then we may be a little more aggressive in anticipation of a rally. But since it came further down and it's consolidating here, then we have to treat this as a range. This range being around 0.8830 to 0.92. So, ranging action. That wraps it up for today. Visit fxtimes.com for daily updates and technical and fundamental analysis, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at CMS Forex, wishing you good trading.